Wonderful week on US crude. Last week I expected a drop. Last two and few weeks back when oil was trading at around 110 levels, I told you oil is looking forward to achieve this zone as $80 levels, and it has precisely achieved this zone and achieved $81 last week. I hope you all profited. Now what is going to happen next week, we will see with the help of charts and indicators. Missing on to subscribe this channel is missing on the profits. Do not commit this mistake. Do like, share, subscribe and comment. And yes, do press the bell icon because the next and daily updates on oil which I share before the Asia session, definitely till watching those definitely will help you in your day trading decisions. So do watch those also. Let's start the day. Look, one thing, see 85.5 level, this is a stronger resistance. Previously we have seen 4 to 5 candles getting the support from 85.5, 86 levels, and last week it broke or it breached those levels, went till towards 81 levels. And if you recall last week's analysis, I told you 80 to 80 zone is going to be a stronger, tougher resistance for oil to break past. By now, what if it sustains below $80 levels? Yes, it could call for further round of fall. I told you very clearly it has lot much of downside movement yet to cover. Now look at just the last week's movement. It is still trading in this bearish channel. Only reversal confirmation, only confirmation of bullishness is seen if you see oil trading above $87 levels, and 87, if you see it still till 90 levels, it has got very stronger resistance. So yes, it can, see, even if it has to reverse, it can give you similar size of similar type of candle trading between 80 and 90, and then from there the reversal can happen. But this week the bullishness appears is there, but appears you have to be very cautious with your bullish position till the time it trades below 90-92 zone. I have told you this also several times. 90-92 zone is going to be a tougher resistance, and then 95-96. These two levels, if it breaks, then you can consider oil as bullish, and till the time it trades below, possibly you can expect more bearish. Now look at this last two candles trading below this zone, and yes, if it trades below again 85 levels, if you see it dropping below 85 next week, you can again go short on the downside. Yes, there is lot much distance to cover, and hence you can again expect 82, 81, 80 as the next targets, and in fact this time it can try to hit 78 levels. Be cautious with the long positions specifically this time. Now these are on the weekly charts. Let's have a look at the daily chart. See, on the daily charts you can find out previously higher highs, flat bottom, trading within this zone. This time it breached below these levels, now trying to bounce back, trying to retrace. So is it a reversal or a retracement? Now see this, it is trying to trade within this channel. The lows are very low there on the downside. It can breach $80 levels. At the same time, you should watch out for 87, the first level, and then in fact 88, 89.2, 90.2, these levels you should watch out for. Every dollar it has got a stronger resistance zone. Only and only if it sustains above 90 levels, you can expect that we may again see it hitting 93.5, 94, the next resistance level, and then 95, 96 zone. Sustaining above 96, it will call for the bulls out there. Right now it is trying to retrace a little. Be very cautious till towards 87, 88 zone on the upside. Now on the downside, see, this is the second green candle, and probably once it breaks below the zone at 80, 84, yes, you can expect a little more drop. Now this is on the daily charts. Let's have a look at the 4-hour charts. See, on the 4-hour charts, after a little consolidation, this gave a breakout yesterday, and see, it was trading in this bearish channel which was an expanding. Still it is trying to retain the highs of this channel, so be very cautious till towards 87, 88 levels. I have told you on the daily charts. I am again telling you on the 4-hour charts, reflecting on the same thing. Only good thing is, yes, you can go long at 87, expect it to rise for 87.5, 88, 89.2, 90.2. Yes, if it breaks above 90, definitely one can expect a stronger bullish momentum than 92 levels can be expected. Now this is on the 4-hour charts. Also on the downside, as I said, yes, if you see it dropping below 84, yes, you can go short. You have to be very cautious in between 84 to 87 levels. These $3 we have to ensure that we trade with extra caution. Now let's have a look at the monthly candle there. And see, I'll give you the trading levels and strategy towards the end of this video. Do watch till the end and do continue listening to the levels which I share while analyzing this. On the monthly charts, it has shown a perfect symmetry. It has achieved the levels here on the monthly charts. I told you it can achieve, it has the potential to achieve $80 levels. It has achieved, and further on the downside, yes, it can go back till towards 76-74 zone, which is a good support zone. So this time, see, it has almost achieved the bottom of this channel, and this is an expanding channel there. We have seen consistently it achieving the highs there. So be watchful of $80 levels. Only if it sustains below 80, it will call for another round of drop. Now look at the four candles there. Consistently four candles of bearishness, consistently four red candles. In fact, this candle started at around 94.95. Yes, if it breaks beyond the zone, you can still expect 96 and 98 to provide it a little resistance. And on the downside, $80 levels are the support. On the downside, 70 to 70 levels can be a good support if it continues to trade on the downside. Be careful. Be careful with the longs till the time it trades between 90-92, or in fact till 95-96 also. It can reverse any point of time. So this is what we can see in the charts. Now let's have a look with the help of the indicators. What does the indicator suggest? On the 4-hour charts, as I said, 84 is a very good support. 85.5 is a good support. Yes, you can expect till 84. You have to be very cautious. You can go short at 85.5. Expect 85 and 84 levels to provide it a support. It can reverse any point of time from these levels also. Hence, you have to ensure 82 is maintained. Then if it breaks below 82, you can see 82.5 and 82 levels providing it a support. Below 82, it will call for a good crash. On the upside, yes, if it breaks beyond 86.5, rather I will say beyond 87 only, you can go long, or for 88, and then beyond that we can expect $90 levels also. Directional movement is bullish. Stochastic is at high, and it can potentially take a sharp drop from here. The MACD is divergent and bullish. It has seen a high. It may potentially converge from here. The RSI has seen a high, and potentially it may take a dip from here. So on the 4-hour chart, it appears it may try to take a dip, or it may try to drop a little. On the daily charts, this zone between 89.2 and 90 is the first resistance zone. And then beyond that, you can find this is the level at 92.93, the next resistance zone, which may give it a stronger resistance on the upside. Also, it traded near to the bottom of the Bollinger Band. That is why we got a pullback potentially of it. Potentially, it can reverse from these levels again. Directional movement has seen a high. It is trying to converge here. Probably even it can diverge more from here. So I'll be cautious of the first two trading days. Which direction it takes, probably it can sustain that direction. Now look at the stochastic. It has hit a double bottom, trying to bounce back. So yes, if it tries to bounce back above 90, it can be a sharp move, and then 92, 94, 96 levels can be seen. Be careful, because the stochastic was oversold, trying to recover those. MACD was bearish, trying to converge from here. It has seen the lows. It is trying to converge from these levels. And the RSI too has seen a bottom there, trying to bounce back. So on the daily chart, it appears most indicators has hit a bottom, and now these all are trying to bounce back on the upside, indicating little bullishness. Now look at the 4-hour chart. On the weekly charts, yes, it has seen a bottom out there. It has seen the support at $80 levels. This is the bottom of the Bollinger Band. This is the 200 weeks moving average, and achieving these levels, it has tried to bounce back. The resistance there at 92 from the 50 weeks average is going to be strong. And here's the 100 week average situated at around 76 levels. Be careful. If it drops below 80, we can see a little more drop. See the directional movement, it is started to diverge again. It may continue with the divergence. We have seen earlier stronger divergence on the bullish side. It can continue to diverge on the bearish side too. The stochastic is almost trading at the bottom, but yes, it has still got some room for it to drop further. The MACD has seen the low, it has seen the lows there, and it is trying to converge here. The RSI is looking downwards too, indicating little more bearishness. Now look at the monthly candle. On the monthly charts, oil traded below the 20-month moving average for a little short duration, and 20 months means almost close to 2 years, and see it is try to breach these levels but getting a pullback again. So yes, there is a support from these levels, breaking, sustaining below $80 levels, definitely it will call for the bears out there. Now look at the bullishness there on the directional movement. It was trading strongly bullish, trying to converge from here. I will wait if it tries to cross over on the monthly chart. That is going to be a stronger bearish move for oil. Also, I told you multiple times oil was trading bullish here. We expected it to drop with the stochastic, and that is why we can see a sharper drop. That is how I told you that we may see a oil dipping till towards $80 levels. Now see on the monthly charts, it is willing to cross over for a bearish move. A red candle this time definitely will do the job, and then oil will enter into bearish territory on the monthly candles. Next couple of months and few months from now can be more bearish for oil. RSI looking downwards again. So we have seen the charts and indicators on various time frames. Now let me give you the trading levels and strategy for next. First, let's talk about the levels to go long or buy on oil. And before I give you the trading strategy and methodology for next week, yes, if you want to learn this art of reading the charts carefully, taking right entries at the right times, making right profits, and taking a right exit, you can join my mentorship. As this is a 15 days session, live webinars for 90 minutes daily. Definitely the strategies taught and the methodology provided will help you become a proficient and efficient trader and a profitable trader. So do not commit this mistake. Do invest in your learning first, and then definitely you can reap the benefits for the life. So do reach out to me for this training and mentorship. My Telegram and email IDs are mentioned in the channel and video description. My Telegram free channel is also mentioned in the video description. Also, you can become a patron. Just a $7 support a month will help me and motivate me do better analysis and deliver better results, better profits for you day on day without fail, with motivation. So do become a patron. The link is mentioned in the channel and video description. Now next week, if you see oil trading above 86.5, yes, you can go long here. Beyond 86.5, remember I will give you resistance at 87, 87.5, 88. This is the first milestone and strongest resistance for oil. Only if it trades above this zone, that is 87 and 88, you can expect that the next direction, though 89.2 and 90.2 are there as the little resistances, still I will expect it may try to direct land till towards 90.2 and 92 levels. These levels are going to be stronger resistance. 92 is going to be a good strong resistance. Then 93.5, 94, this is going to be the next target, and beyond that 95, 96, 98, these are the levels. Beyond that, sky is the limit. Anything is possible, and anything and every levels are possible. But remember, it can reverse. You can expect that till the time it trades in fact below 96, possibility for it to drop again exists very high, and it can continue to drop this time. Now on the downside, you can take a short entry. Where to go short? You can expect, you can in fact go short at 85 levels, and below 85 levels you can expect that we may see a little support at 84.2, 83, 82, 81 and 80. These are the support levels till 80 levels for oil, and below 80 levels you can expect that we may see 79.3, 78.4, 76, and below that 75 and 74 levels. Be cautious. Yes, anything are possible. Anything is possible. It can take either direction. It can trade any direction, any which ways. Hence, you have to ensure that you have your stop loss in place. You have a trailing stop loss in place, or at least you have a limit of greed in place in your mind, such that you can close your profit, you can close your trades in profit, and you can re-enter every time. First main mantra is to keep shifting your stop loss to cost. Having a stop loss to cost is a mental satisfaction for you. Having a stop loss to cost is a gift to you, such that you can exit. Even if it tries to take a sharp dip, you can exit without a loss. And preserved capital means stronger confidence, and you can take 100 different trades if you have your capital preserved. At the same time, booking little profits is another mantra. Limit your greed, book little profits whenever you see your trade is in profit. Either keep trailing the stop loss or keep exiting at a milestone or a resistance level and keep re-entering if you see it trading in your direction. Adopt this mantra, trade accordingly, trade profitably, trade with a stop loss, trade with trailing stop loss. Do like, share, subscribe, and comment. Do watch the daily analysis as well. Do press the bell icon. Thank you very much. Have a great profitable trading week ahead. Thank you.